Good morning, it's March 8th, and we're going to get right into what's happening in the markets and potentially why. So, first off, 2 days ago, I was telling you about overbought signals, and we went through a host of those on the Longbow platform. Today, I'm going to talk to you about where we are on those signals. Obviously, yesterday was a big down day. Chairman Powell of the Fed was testifying in front of Congress, and he gave very hawkish statements. So, what does that mean? That rates are going to be going up higher than most people expect. That was kind of one of his points, and they would be open to having larger rate hikes. So before that, everyone was thinking, okay, we've got a few 25 basis points, so that's 0.25% hikes coming up this year, and then maybe they'll pause, maybe they'll ease. But what he was telling folks is like, no, inflation's still high and sticky. We're going to have to be hiking rates. We have to fight inflation. So it's still going on today. So there's a lot of wood to chop there. But let's take a look at the Longbow platform to see what's happening with some of those same securities that we were looking at a couple of days ago. So first off, let's take a look at the dollar, the UUP ETF. We have an overbought signal here. So the white line's above the red line, which is the high end of the trading range. And one of the interesting things, if I can switch to the KISS view here, is that we've got short-term momentum being bullish as well as medium-term momentum being bullish. And so that overbought signal means maybe you would trim or think about it, not the day to add, but it's still in a very bullish formation. So the dollar's getting stronger. That's what it's telling you. So this isn't the type of thing when, at the top end of the range, you'd be shorting unless you have the view in a very near term that you think that the dollar is going to weaken. We happen to think the dollar will weaken, but on a more intermediate term basis. So we'd be cautious about going short right now because this momentum is telling you that's where it's headed. It's headed up, the UUP. I'm going to take it off the KISS view, and now let's take a look at the SPY. So that's the S&P 500. Remember when it was at or above the top end of the trading range? You're not getting that today. So now it's not below. We had a big day down yesterday. It's not at or below the low end of the trading range. It's somewhere in the middle, but it's heading down. So all these signals that were overbought before, we're seeing neutrals on. Same thing with the Qs. That's the NASDAQ, call it equivalent ETF for tech. That's in the middle of the range. Well, China, they've had a little bit rough time, had to do a bit about what happened over the weekend, meaning that China came out and said that they're targeting 5% GDP growth this year. That was a little underwhelming versus hopes of other people, and it brought down expectations of stimulus this year. So again, we're not at the low end of the trading range. We're still in the middle of it, so nothing to do. But you see Japan nearing the top end of the range. Why did that happen? Well, it's a safe haven in times of what happened yesterday with the Fed, markets going down here heavily in the US. So the yen appreciated and people are going into Japan. The TLT, that's a 20-year treasury. So what happened with Powell? So this is interesting. I put the SHI in here with the TLT. TLT has longer duration. That's 20-year treasuries. And SHI is the 1 to 3-year treasury ETF. So you think short-term rates are really going to pop up more than expected. Guess what happens to those treasuries, that fixed income? The price of them goes down. So it makes a lot of sense that that white line is heading towards the low end of the trading range. And that's different from the long duration. People actually said, oh, the hikes are going to happen now. They might be bigger than expected. And maybe we'll see lower growth rate, maybe rates less high going forward. So you actually saw when rates go down, guess what happens? The TLT goes up. It's the opposite of the short end. We know that what's been happening with the 2 to 10-year spread. So that's, you could kind of look at it, the SHI versus TLT, is that you see this big inversion. You get paid a lot more money for putting your money to work on a short term, and you make less money if you keep it held up for the long term. So that's what happens and why the TLT is near the top end of the range and the SHI is near the low end of the range. That's it for today. We'll keep you updated. There's probably going to be more wood to chop with inflationary data this week, and we look forward to seeing you tomorrow.